Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach with Charles Schwab and delighted that you are joining us today. I started in this world of investing as a client back in 2011. And when I saw my first chart, I found it so empowering. I was so excited. I think my car about drove itself home that day. And I have been in love with the reading of charts ever since. And that's really what technical analysis is all about. So that's what we're going to talk about today. One of the comments that I often see in the surveys is, I love it when you place trades. So we're going to look at trends and different price patterns and look at how we can use technical analysis to help us make informed decisions on when to place a trade and then maybe where to establish a target and an exit to get out of a trade, both if it goes our way and if it doesn't. And we're going to walk through several examples and place some example trades. So that's what we're up to today. If you are joining us for the first time, please feel free to type a greeting into the chat. We meet here live every Tuesday at 2 o'clock Eastern, and we're linking arms together to figure this stuff out. And, you know, we have a lot of people who have been trading for a long time that continue to come to classes like this to just hone their skills and get a little more practice in. So we'd love to have you be part of that community. So to all the regulars that are here and the brand new people as well, to Brad and Josh and Will and Frank and Kevin and the rest of the gang, thank you all for joining us today. We also have the pleasure of having Mr. James Boyd with us in the chat. He's a friend and a fellow coach. He understands all these strategies that we're talking about and then some. So if you've got any questions, please don't hesitate to type them into the chat. And yeah, and between James and I, we should have answers for you. Now, if you are not following us on social media, you are missing out, my friends. You're going to want to follow James Boyd CS. He is a prodigious poster, and myself as well, at Barbara Armstrong CS. We're also now on LinkedIn, so you can wander over to LinkedIn and find us there as well. Just know that we're going to talk about a lot of things, and I'm going to show you a lot of charts today, but just know that all of this is for general information purposes only, none of it to be construed as a recommendation on the part of Schwab or myself to trade any particular stock, chart pattern, or investment strategy. Know that we are using the Paper Money software application on the Thinkorswim desktop platform, and this is a great place to learn. Okay, so it's a great place to learn, hone your skills, make sure you understand how the trading platform works, make sure that you have a plan in place, and that you understand your plan and have practiced trading your plan. And this is a great place to do it before you go to your live account. We are going to talk about stop market orders, but know that when we put in a stop, it doesn't guarantee that we're going to get out at the price requested. If the stock were to gap down, you know, we could end up out at a lower price. Yeah, so if somebody has asked if I'm going to be teaching Friday, and the reason for that question, because I teach a trading a smaller account class on Mondays and Fridays, and I am going to be in Chicago for the market drive this coming Saturday. If you haven't registered, it's not too late to join us. And then the following weekend, there will be an event, or actually 2 weeks later, there's an event in Santa Clara. We've taken down registration for that as we're pretty packed. But if you live in the Santa Clara area and you want to come, if you show up, we will register you that day, and you can still join us. You know, and then we've got events coming up in San Diego and Chicago. I will fly to Chicago on Thursday, so that I will be teaching from my hotel room on Friday morning, but I will still be teaching. But these are fantastic events. It's how I got introduced to the world. Awesome. All righty. My apologies for that short commercial break, but we are going to come right out to the charts, and we're going to look at some different price patterns today. And we're going to look at how we can use various price patterns as part of our decision-making process. And the focus today is going to be on bullish price patterns. And why is that? Well, if we look at the S&P 500, it's up almost 8% year to date. It hit a new all-time high yesterday. And if you come underneath patterns and you click on this little icon and say show price as a percentage, and we come and look at a 1-year chart, the S&P is up about 26% in the last 12 months. When we look at the NASDAQ, it's up about 38% in the last 12 months. And it too hit a new all-time high yesterday. And if we look at even our small caps, which we don't tend to do as many example trades on, you know, it too hit a new all-time high here in the last week. So the market has been pretty bullish. And so although there are patterns that are bullish, sideways, and bearish, you know, we will look at a couple of bearish trends, but our focus is going to be on the direction that the market overall is moving. Now, when I said there are still things moving in a downward trend or bearishly, if we look at the S&P 500, and this is SPX, and when I put in A50, this shows us the percentage of companies that are trading above their 50-day simple moving average. And if I'm going to just come back to our regular here, it's about 50% of the stocks that make up the S&P are trading above their 50-day moving average. So that means that about half of our stocks that, you know, that make up the S&P are trading below that. Oh, interesting. My system wants me to do something. Just one sec. Verify that it's really me here. Oh, it's an interesting day. Okay, so the first stock I want to look at is, let's look at STX. So STX, we can see when we look at a 1-year chart, it has been kind of going sideways and then uptrending. And this red line is a 30-day moving average. So that's been kind of acting as a support level. And then it came up and started going sideways for a little while, you know, and it was trading in a range from January through the beginning of April. And then it broke out of that range and really took off. And, you know, we see lots of patterns change over time. And this is one of the things that we want to watch for. But if we come and hone in here, there's a pattern that we call a bull flag pattern. And, you know, when we look at this, for those who, you know, look for these patterns day to day, you may say, well, if I were playing I Spy with my little eye, this is the kind of, oops. This is the kind of pattern I'm seeing. My drawing tool doesn't want to work. Let's try it one more time. Still not working. Okay, I'm going to do it another way. Where there's a will, there's a way. So we had this come up and then pull back. Now with this pattern, the way some people will trade it is they'll say, when I have a close above the high of the low day, I'll consider this a technical pattern that I can trade. And so far we have this bull flag, and then we have this 1-day pullback, but we don't have that trade above the high of the low day yet. And so some might just want to put that on their list and say, hey, I'm going to watch this. You know, if we look at another example, and let's look at Ross Stores. So here's another example, like over the last 6 months, this stock is up 20% year to date, and it's been using this 30-day moving average. It'll come down and kiss it, and then it seems to keep going up, comes down, gives it a little smooch, keeps going up, comes down, hung out for a few days, came up, came down and touched it, came down again, touched it. Yesterday, it broke below. And so, is this a total change in trend? Well, today we have this pattern that's called a bullish harami, in that today's candle is totally inside the previous day's candle. And, this is not a pattern that requires confirmation. So some might consider that tradable. Some might say, I'm going to wait until this comes back up above the 30-day. And there is no absolute right or absolute wrong. But this is an uptrend. Now, are there stocks that are downtrending? Well, we don't have to go too far to find those either. Like if we look at Nike, it was kind of trading in this sideways pattern for a little bit, right? Between about 60 and 66 or 67. And then it broke out of that pattern to the downside, gap down on the last earnings, and now seems to be trying to find its way again. But this overall pattern has continued to be downtrending. And, hit a new, at least 6-month low today, and it's down 33% year to date. Now, in order for this trend to change, what might we be watching to happen? Well, we might say, well, what we'd like to see happen, before we consider trading this. Please work. Okay, you know what? I've got other drawing tools I can bring up here. Okay, here we go. So we've got a bottom and then another bottom setting up. What we might wait to see happen is for this to come up and break through. And some might say, I'm going to wait and make sure it's not a fake out, that it's a true breakout, and retest, and then starting to move forward. Okay, so do we have that? Yet? No. And so we might say, we're just going to wait. And we'd call this a double bottom pattern. But as of this moment, is that pattern complete? It is not. But it's a possible double bottom. And so, we might just leave that on our radar. Now let's come and look at Visa. So why am I going to go to Visa? Well, you use your Visa to buy a pair of Nikes, right? So the reason I brought this one up next is because when we look at this, we had kind of a basing pattern here too, where it kind of came down again, came down, and then we had earnings and it gapped up, came back. And what we'll see in technical analysis often is here we had a floor or a support level, that it hit multiple times, and an old floor or support level can become a new ceiling. And then it broke down, and then when it came back up to the old floor, it said, you're not coming through. It spent 4 or 5 days butting its head, another 4 or 5 days butting its head. It came down and established this new low around 295, came up, hit its head again. And we call this an inverted head and shoulders. And so if we said, well, it looks like Visa just, had their earnings, I wonder what those results look like. Well, one must assume that they were probably pretty good for it to gap up the way it did. It came back to retest. And let's say I'd like to be an investor, but what I really want, let's say I'm retired and, I would like to buy a new car, and I've got lots of money to live on, but, a new car is an expensive purchase. Or maybe I want to, take the whole family on a vacation and create a vacation fund. And I want to just do some shorter term trades. I don't want to buy Visa and hold it for the next 10 years. I just like to make some income, but I'm most comfortable trading stock. And so I wouldn't mind buying it. You know, it looks like I have a technical entry here. Where might I put a target? And the way we would establish a target here, so we'd say, okay, we went from 295 to 320-ish, because, you know, these support and resistance are ranges. So that's about a $25 move. So I'm going to take 320 and I'm going to put my target up here at 345. And so, you know, I could make about $25 a share. So somebody's saying, did the recent pullback invalidate it? Well, okay, let me just shake the Etch-a-Sketch. So some might say, well, it came back to retest, and that's not uncommon for it to do that. So it gapped up, came back down to retest this old ceiling. Has it become a new floor? And it looked like it did. And you know, when we kind of hone in on these patterns, whoops, I need to close that. Clear all drawings and let's close it. When we hone in, like this came down and then we had this bullish Harami pattern, which is considered tradable. So if we had bought shares then, we would have been buying them for, you know, 320 a share instead of now 327. And then we would have said, oops, was this a mistake? Because not all patterns come through all the time. Nothing is, you know, for sure. It pulled back and then it did, you know, it did rally, and we now have this, you know, this day we had a close above the high of the low day and it's continuing to move up. And so it hasn't invalidated it. You know, it came back and retested this support range. And so if we said, okay, we'd like to put a target up here based on this technical pattern at about 345. Okay. And so here, this would be our target. And then where might we put a stop? Well, we might say, okay, I'm going to put my stop below this, say 320 level by say 3%. Or you might say, I'm going to go 3% below the low of this day. So that would be 316. But if we took 320 and made it 0.97, our stop would be around 310.40. And so we'd put our stop, that would put our stop down here. So if it came back to this far, we'd say, you know what, we're expecting it to go up, not down. And so how would we put that order in, you know, if we wanted to do that as a stock trade? So we'd say, okay, we're going to come to our trade tab. We're going to right click. We are going to buy custom with an OCO bracket, and we're going to put in our target of 345. And then our exit at 310.40. And we're going to make both of these good till canceled. We're going to buy 100 shares. We have a $500,000 account here. And so 100,000, you know, this would be a $32,000 position. And as long as we're okay with that, you know, and so we're saying our target is to make $17, or if it goes down by about $17, we want to exit. Now, there's no guarantee if the stock gaps up or down, we could end up making a little more, or we could end up losing more. And we're going to put this in our stock with target group, and we're going to put a note in, and this is just a note from us to us that says our target is based on the width of the head and shoulders pattern. It's actually an inverted head and shoulders pattern. And so that's how, whoa, okay. Oh, saying I don't have enough money to place that trade. Well, you know what we're going to do? We're going to come in because one of the things I wanted to do was follow up on a trade that we did on Tesla. And so we put an order in on Tesla. We bought 377, or we bought 66 shares. And when we come to the chart on Tesla, what we did is we saw make it good till canceled. So when you come and we look at this activity here on our stocks with targets, and we look at Tesla, we've actually made, it's now trading at 429. We intended to get out at 400. And so this was kind of a happy mistake. Like we would have made 1500 had we gotten out at 400. Now we're, up at 3500. So we're going to exit that position, which will add 28,000 to our account. So we are going to create a closing order and sell that. Take the money and run. Okay. So that will put some money back in our account. And I will go and put that Visa trade in so that, we can follow up on that in a future class. But I'd like to look at another pattern. And this is on Devon. So this is in the in the energy sector, and so some people might say, I'm kind of avoiding the energy sector right now because of what's going on in the Strait of Hormuz. But if we look at this and say, well, this is up 28% year to date, had kind of a pullback, and this is a pennant pattern. And that's setting up, but it hasn't broken out yet. So is the only way we can trade a pennant pattern is to say, hey, I'm going to wait and see if it breaks either to the upside or to the downside. Well, sometimes we can trade within a pattern. So maybe, and in this class, we might normally buy, a $25,000 position. So maybe we'd buy 500 shares. Because I've got to do I don't typically manage this account. I've got to do a little bit of management. We're going to buy 100 shares. But could we do this if it was, again, we're looking to just make a little short-term gain, put a target in maybe around 50, and it's trading at, or maybe if we look at, if it were to come up, that might be around $50.50, and just look for a $350 gain. Now, like if we did 500 shares, that would be times 5. And then where might we put a stop? We might say, well, if I'm looking at this to hold as a support level, maybe I look at that $46 level and put a stop 3% below that. And so sometimes we can trade, there's the opportunity to trade within the pattern. Okay. And so if we wanted to put a trade in like that, again, we're doing something similar. We're buying custom with an OCO bracket. We're going to say, okay, we wanted our target to be $50.50. We want our exit to be if it breaks below that support level, 44.62. And we're going to make sure we don't make the same mistake I made with Tesla. So we're going to make that good till canceled. Does this make sense? And we're going to put that in our stock with target. So, and again, we're looking to exit if it goes up $3.42 or if it comes down $2 and, almost 50 cents. Okay. So Mr. R, the positive man, is saying, what is the best company to trade with low income to gain more money? You might want to check out the Trading a Smaller Account class on Mondays and Fridays where we use more option strategies. Where we're putting less at risk, and we have less that, like, we're investing here 4,700. The last trade was over 30,000. Okay. And Visa I'll put in again after the end of the class. But given that we had a technical hiccup and we lost a few minutes, I'd like to come and look at Apple now. So Apple, again, is one of these stocks. When we look at it, we had this consolidating pattern, right? And if we come and we look at this on a longer basis, year to date, it's up 8%. But when we look at the last year, it went from 193, it's certainly up, it's up 40%. So that's pretty bullish. That's, outperforming the market, right? But we had this period of consolidation. And one of the things that we did both within this class and trading a smaller account is when it came down and bounced, we said, well, what if we just put in a trade and traded it up to here? And then I wiped those off. And then we bought some stock here in the trading a smaller account class. And we just put in, we call this a swing target. We're just going to trade it back to the previous high. And if we come and we look over here, if I come to the account statement and we look at Apple, now this is a smaller account. We couldn't buy 100 shares. We bought 18 shares. And we bought them at 270, 275, and we sold them at 288.89. Now, our target was 288, but I think that day it may have gapped up and opened higher. And so we got, out at a little higher price than what we had requested. But, we made, about $16 a share. And in this small account, 16 times 18 shares, 288. We don't call that a base hit for that account. That's like a double. So we were happy with that. Now, it came back to retest and then went up and hit our target. Well, in this class on May 5th, we put in, so we can get rid of this now because that trade is done. So we put in another trade. We said, okay, this is kind of more, it's still a diagonal resistance breakout. And this looks a bit like a bull flag. Now, it's not the tidiest bull flag I've ever seen, in that we had a gap up on earnings. Oh. Kind of came up, came down, and then on this day, we had that close above the high of the low day. Now, it depends on what your trading plan is, but we got in on this day. And now how do we establish a target? Like because we're pretty close to this swing target, right? So we're saying, well, that's hardly worth investing our money in to put a target in that's that close. What other target could we use? And so what we decided to use as a target, and I'm just going to back this up a little bit. So we said, okay, we're going to measure from here to here. Because when you have a pennant pattern, one of the ways you can establish a target is say, hey, this came up about $41 or $42. That's the width of this pattern. And so what if I came here and said, well, from here, I'm going to go up about $42. That gets us to about that 307 mark. And so that's how we came up with this target. And so we now have a trade on Apple in our larger account, which is where I usually place our trades for this class. And, we're up $1,000 on this. And our target on this, if we come to our working orders and I sort by symbol, we can see that we put in a target of 307. And that's how we got that target. Okay, now our stop is back at 266.75. can we adjust our stop? Like our stop is way down here. Sure, we could say, well, hey, it looks like this could now act as a support level. So if I come here and show our orders, why am I doing that? Because this shows me where the stop is. So then I can come and say, well, I'd like to make it about 3% below this previous high, this 288. So let's make it about 279. So, and I can just take it and drag it. Say, okay, yep, that's where I'd like it to be. And so that's how quickly you can adjust your stop. Okay, now what if you're saying, well, this all looks like snazzy and all that, but like I didn't come to those classes. So what I would like to know is if I were looking at Apple today, what might I see? And you know, so let's just right click on this. We're going to clear the whole drawing set. If I were to look at this now for the first time, and I would say, well, what I'm seeing is that we had this uptrend here, followed by this period of consolidation. And I see this double bottom pattern. And it broke out, came back for one day. So if I were to want to place a trade on this now, like where might I make my target? I might say, well, this came in, you know, if I have my bottom around 246 and this top around 278, I'd take 278 minus 246 because these are ranges about $32 and say, well, I'm going to add, you know, that 278, whoops, 278, I'm going to add $32 and I'm going to put my new target up here around 310. And you could buy your shares, however many shares they, and you know, like we bought what, 16 or 18 shares in our trading a smaller account. And were we unhappy with our result? No. Like we, you know, we were pretty pleased. You know, so if we wanted to make that 310, could we buy 100 shares? Well, it looks like we still have 40,000 in our account. You know, but if we said, well, we don't want the position size to be more than 25,000, okay, well, then we take 25,000. We're going to divide that by the current price, 290, make it 295. We could buy 85 shares. So, you know, can we do a trade with 85 shares? Sure. So we're going to come to our trade tab. We're going to right click. We're going to buy custom. And we're going to have both our stop and our target. We're going to make our target 310. Now we may, you know, want to make that 309.50. Whoops. 309.50. And if we want to give this, you know, and look at this as a, okay, where would you see a support level? You're saying, well, I see this as a stronger support level around 278. You might say, well, I don't want to come back that far. You know, it came up and hit this 287, seemed to retest here, maybe go 3% below that. Then your target would be around this support level, around that 278. And so you might say, well, I'd like to go a little bit below that, maybe 276. You know, we could make this 276. And, you know, one of the problems with a really tight stop is that you're more likely to be stopped out. So by going kind of below this support level and this support level, it's reducing our probability of being stopped out. If we come and we look at this and we say, well, we think this could take a few weeks to come up and hit it. Maybe it could take, let's say it could take 3 weeks. If our stop is at 276, what this is saying is we still have about a 30% probability of it coming down and touching that and nicking us out. Our stop is between 275 and 280, at 276. So we have about a 32% chance still, when we just look at these probabilities. Now you might say, well, I'm looking at the chart. And so, this is giving me, I think a level of safety that I'm cool with. And then we're not going to do 100 shares. We were going to do, was it 75 shares? Let's see. That's 22. Maybe we could buy, it was 85 shares. So yeah, there's our 25,000. So we're buying 85 shares and we're putting that in our stocks with targets. And then we can put a note, and this is just a note from us to ourselves. Our target is based on the double bottom pattern. Double, I can type. Okay. Oh. Okay, so that one is going to have to go in tomorrow also, but I'll make sure that we put these example trades in. So that's Apple and Visa. So there we go. So we've looked at several different patterns today. We've looked at an uptrend. We've looked at a downtrend. We've looked at inverted head and shoulders patterns, pennant patterns, and double bottoms. And so all of this to give you a sense of how we might use the patterns we see on the chart to help us make more informed decisions and to establish targets and exits. There is a survey in the chat today. So there's 2 questions in the survey. And technical issues aside, one was I hated it. 10 was I loved it, and there's everything in between. And then you have the ability to put comments in. So if there are other topics you'd like to see discussed in this class, let me know. My commitment to you is if you fill it out, I will read each and every comment. You can also hit the like button. It helps move things up in the algorithms on YouTube so more people can find this content. And then don't forget to follow James and I in the land of X, Barb Armstrong CS, James Boyd CS, and then hit the subscribe button. It's free to subscribe, and then you can find, links to this class if you want to watch it again, links to all of James's classes and the Trading a Smaller Account class as well. So hit that like button in the bottom right corner of your screen. Our time is up. Have a really awesome day, everyone. Thank you for joining us, and we will see you here next week, same time, same place. Take care. Bye for now.